So let's wrap up this topic about gold and silver, because I think it's an important one. Obviously, it's getting a lot of attention these days, particularly when we see these big price run-ups. And I want to come back to something I was saying at the very end of the segment, which is that you have to understand that this is a very highly unregulated part of the industry. And when we think about these ads, or we think about these social media claims, and we say gold's going to go to $100,000 an ounce or whatever the claims are, you have to understand that there's no underlying regulation that ultimately governs that. So that leads to a lot of, I guess, exaggeration in terms of what your potential return might be. So be careful about that, along with the notion of the herd mentality, that fear of missing out. The reality is that a pound of gold is still a pound of gold, whether it's a pound of gold today or when Jesus was walking the earth. So when you think about that and some of the real things that you can actually invest in terms of companies that make products that the world uses every day, I think the results speak for themselves in terms of that long-term performance numbers. And of course, gold has certainly plenty of periods, in silver, plenty of periods where you've got stagnation in terms of the overall cost. So as an investor, what you want to continue to do is to make sure that you are embracing diversification, whether it's among stocks or bonds and cash. The reality is that's how you ultimately can weather through whatever the volatility might be, because the reality is that those types of investments are always fully liquid. They don't have these massive carry costs in terms of, okay, where am I going to store this thing? How am I going to insure it?